Good afternoon. I want to welcome you to our Learn at Lunch webinar today for the month of August. And we will hear from Extension Specialist Roger Saws as he discusses current Oklahoma land values. You may ask questions through the chat window by clicking the chat button at the bottom of the screen. Additional farm management resources may be found on the eFarm Management page. I will share this link in the chat window. Our next webinar is scheduled for September 17th at noon. We will learn about the Oklahoma Quality Beef Network. Roger, I will turn it over to you now.
Okay, thanks a lot, Brent. Hopefully everybody can hear me. If not, just let us know. As you know, we're in the process of moving some personnel over to the new Ag Hall, and we're calling the old Ag Hall Legacy Hall. Fortunately, I've got the pleasure of staying in the old joint, and so I'm still in my old office, and they're working on the elevators right outside my door. So I think during the lunch hour they'll give that a rest, but they've been making a lot of noise this morning. So bear with us in case they start up during the seminar. I'd intend to spend some time with you this morning talking about land values here in Oklahoma, exploring some of the recent trends and patterns and some of the factors driving the land markets. We'll briefly review what's going on in the farm economy and how that translates into the ability to pay for farm ground. I'm a firm believer in the good market information, of course, the commodity markets, land markets, all very important, and that kinds of analysis is critical, especially if you're an active participant in the land transfer market, or if you have land holdings. You've got an asset there that's worth a chunk of change, and you're wondering how it's performing. And as you all know, it is really important to production agriculture in terms of how those land markets are performing, because it constitutes a major percentage of the asset value in the balance sheet. It's about 80%. And so how that asset performs really does have a big impact on the overall health and well-being of production agriculture. So let's get started, and let's see. Here's the next slide. So before we start discussing the results from last year, I just wanted to give you once again sort of a highlight and background on how we got here. And so our land values and study is based on some actual market sales data provided by the Farm Credit Associations of Oklahoma. So they give us a sample of their data set. And so it gives us a glimpse as to what's been occurring with the land sales market over the past year. Now, our average farmland sale was about 548,000. Of course, that's the mean. There's a wide dispersion of values amongst that mean. So you could have purchased a $33,000 40-acre tract in Texas County, of all places. All right. So this was, for less of a new car, less than a used car for that matter, for about $825 an acre, you could have purchased a grassland tract out in Texas County, and then grazed maybe 1 or 2 cows on it. Then we had all the way up to about a $20 million cattle ranch down in Cole County that amounted to, I think it was 5,900 acres. So that's a sizable operation down there. So of course, a wide dispersion of values. We had about 1,200 sales tracts in which to analyze. I think this gives us a pretty good perspective or glimpse as to what actually transpired with that land transfer market over the past year. It was down from 2022 and down from 2021, when we had about 1,700 acres or 1,700 tracts, excuse me, that we had to analyze. And so I think we had a limited inventory of tracts. And I think that once again, that's sort of reminiscent of what's been happening in the land markets here in Oklahoma, maybe also a little bit nationwide, certainly with the residential markets. We're not the only kid on the block that has information on land values. Our counterparts over at USDA and also the KC Fed also have reports on land values. They are survey-based impressions of the markets. And so they ask their respondents as to their opinions and observations as to how they feel those land markets have changed over the past year. But regardless, I think these data sources are valuable. They provide some interesting dynamics in terms of comparisons and contrast to our values. I think we're looking at the same thing, essentially, the land markets, maybe from a little different perspective, because our sampling procedures and methods are a bit different. But I think that you'll see here in the next couple minutes that the trends and patterns are really quite similar. So let's look at what's happened in 2023. And so this is sort of a composite. This is also on our website, by the way. I'll talk about that at the very end. But on our updated website, we've included the 2023 numbers. And so if you look at it from a standpoint of what's happened, the overall land markets were up about 2%. It doesn't seem like a whole lot, especially in comparison to just the recent couple years, especially in 21, 22, post-COVID. There's some reasons behind that, and I'll talk about that in just a moment. But we still have some modest growth in the overall markets. And of course, that all land includes pasture land tracts or cropland tracts and the mixed tracts, a little bit of each. And so you can see that really since the mid-90s, we've had a fairly upwards progression in these values. And then especially in pasture, it's been fairly consistent. Certainly since the recession in 2009. But if you go all the way back to about 95 or 96, it's been fairly constant in terms of that increase in values. And so last year it went up about 6.8%, close to 7. Also wanted to remind you that of all the tracts that we analyze in our database, usually about 50% are in pasture. We classify pasture and cropland as at least 85% of that particular tract is devoted, okay, one or the other. So about half of them are, in pasture, and of that, about 80% plus are less than 200 acres in size, all right? So we've got a large number of these tracts that represent these smaller tracts of land that are devoted to pasture. A lot of these tracts are in the central and eastern regions of the state that are higher in dollar value. And so if you look at a comparable tract out west, say a quarter section versus the comparable tract out east, the west, of course, the western tract out in the open range country is quite a bit less than what it would be further east. And so once again, about a 7% growth. And I think that's pretty reminiscent of the strong cattle markets in that economy that's providing a lot of support. Also, as long as your forage conditions and we have some adequate hay supplies, that also provides some support. And I think, the pasture also has some added utilities or units of satisfaction from other sources, for instance, recreational interest. All right. Really, that's statewide. But when you are closer to the Red River, there's a lot of folks down in North Texas that are, interested in some of these tracts. In the southern counties of Oklahoma that have recreation potential and opportunities. And then also, when it comes to the urban interest and urban influence in the central and eastern region of the state, we have that, especially when it comes to these lifestyle operations where they're not driving or deriving all of their family living from that tract. Most of it is from off-farm sources, but they're still getting some agricultural production from that smaller tract, running a few cows, a few horses, a few head of sheep or goats and that type of thing. But most of their income for their family living is being derived from off-farm sources. Okay, so we've got that driver also impacting those pastureland markets. So then, as we move on to cropland, it was pretty close to the statewide average for all land, and it's received some pressures not only from interest rates but also from the reduced earnings from lower commodity prices. And I'll talk about that in just a moment also. So, people have asked me, what about the long-term appreciation of farmland in Oklahoma? And we've seen that. This is in nominal terms. This doesn't factor in inflation, but we've seen double-digit growth, and this is annually, since 2000. And so it's there. You can't deny it. And in real terms, if you factored in inflation into those numbers, we're still seeing about a 4 to 6% growth, real growth in land values with all of these classifications here. And so we're still seeing some real growth in those values. And, that's important for a lot of these non-farm investors that are looking at, well, how does that long-term appreciation factor into my asset portfolio? And so does that guarantee that these double-digit gains will be received in the future? Well, sometimes, we look at the past as a proxy for what to anticipate. And while I can't deny that we'll probably see some continued growth in these land markets as we go forward, can I guarantee something double digit? Well, certainly not. There's no guarantees, but in all likelihood, we'll still see some pretty decent growth and appreciation in these land markets going forward, going ahead. They're not making any more land, right? And so it's still in big demand for a number of reasons. So then when we look at it from a standpoint of what about the regional values? And so this is how those numbers shook out. I wouldn't pay a whole lot of attention to the Panhandle and the east central regions of the state. We saw pretty good growth there, of course, right? But, we have large year-to-year variations in those numbers because we have a few acres or a few number of tracts of which we analyze. And so that tends to skew those averages and also those annual percentage changes. Now, in all likelihood, we did see some positive numbers there, but probably not to that extent. I think a better indication of what occurred regionally is shown in the other areas of the state. And also, I want to remind you that if you live in the southeastern part of the state, you own a tract down there, that doesn't necessarily mean that, well, that tract at least gained 9% in value last year. It might have, it might not have. It all depends on the quality and quantity of tracts in your neck of the woods, the motivations of the buyers and sellers in your neck of the woods. And, if you really want to see what your tract is worth in terms of its fair market value, I would look up the services of a certified ag appraiser or professional farm management firm to give you a better feel and flavor of what that particular tract might be worth on the market as we speak. Okay. So then let's see, moving on to the next slide. So then I look at, and this is also on the website, I look at the cropland values by region using that 3-year weighted average. And that tends to kind of smooth out those year-to-year variations. And so instead of looking at a 20% increase and a 20% dip necessarily the next year, for instance, on the Panhandle, tends to smooth out those dips and peaks. And you can see here that, really by and large for the West Northwest and for the Panhandle, it's been moving mostly sideways, a little bit upwards, but nothing, phenomenal in terms of some major appreciation of those values, okay, at least region-wide. Region-wide, those values have gained more when it comes to the Southwest and North Central. And so you can see a greater increase in those values as we have looked back, at least over the past, I would say, since the late teens, certainly. Also, I want to remind you about the 3-year weighted average, how that works. And so, for instance, the 2022 data point, the last one, that represents 3 years worth of data. So we've got the 21, 22, and 23 numbers in there in terms of those averages, but they are weighted. Those averages are weighted depending on how many sales tracks we have within any given year, okay? So then when we move on to the 3-year weighted average for those values on pasture ground, we see more of the sideways configuration and motion with the western regions of the state and those performance levels, but we see some, I would say, better performance, so to speak, greater rates of growth in the central and eastern regions of the state. And of course, those values are higher too to begin with, because once again, they are more influenced by urban influences and also, I think, some recreational interest. It's found out west too, but quite frankly, when you get into the central and eastern region of the state, it seemed like every pasture land tract that I analyzed had some recreational influence. I mean, a lot of them did. And of course, those values are higher also because of, well, just the productivity of those tracts. I mean, we have, generally speaking, better soils. We certainly have more moisture, better forage growth and potential. Stocking rates, carrying capacities are all greater as we move west to east, okay? So how do our numbers compare to USDA's? Well, you can see that the trend line through our numbers, that overall performance is really quite similar to USDA. We have our, numbers that are a little bit different year to year, but overall that the pattern is really quite similar. And also this shows that at least through the first half of 2024, comparing to, I would say, June of last year. So USDA does their surveys in June of every year. So they have to respond as well. How have things changed since midsummer of last year? And so they let USDA know, and they clean up the data and they report the results. And this shows that at least there's still some upwards motion in those numbers, at least for cropland. It's about 8 and 9%, something like that, going forward. So there's still some momentum going up. Okay, so at least from USDA standpoint. From the pasture land standpoint, more of the same, similar patterns. And of course, you can see that there's the lateral shift between our numbers and USDA's. And that's primarily, once again, due to the fact that ours are heavily weighted, and the bus has been driven by a lot of those smaller tracts that are higher valued per acre, all right, especially in the central eastern regions of the state. I like to give credit where credit's due with USDA's, because they do a really nice job in terms of, I think, the overall sampling procedures from east to west and north and south. It's pretty evenly distributed. And so they have I think, a pretty even representation of what's going on in the land markets concerning those particular size of tracts from small to large, all right? And so that's why their numbers are quite a bit, well, I wouldn't say a lot less, but they are noticeably less, and will probably continue to be, especially on the pasture land as we go forward. But the trends are similar. So at least you can understand why our numbers are different from USDA's. So where are the numbers, headed to from here, and what's going on in the land markets? Well, really, it's it's a balancing act, and it really involves with the earnings current and expected, because land really at its core, it's an income producing asset. And so you're looking at this earning stream of these of this productive asset. And so you're thinking about how much can I afford to buy, or how much can I afford to bid, okay, for this asset that's returning this much income over this series of years. It's kind of like, buying a mama cow, or, some of these bred heifers. Yeah, they're expensive, but of course they're going to be generating a healthy earning stream. And so maybe you can afford to pay, or at least you can be justified in paying some of those higher prices for those breeding animals. Now, the real issue is, and of course it's the same thing with land, can you actually come up with the finances to pay for it? That's the big challenge. And the big challenge is with interest rates. And, that makes those borrowing costs more expensive, right? And it just makes it more difficult. And so that's a real kicker. That's pressured these land markets. It's the same with commercial and residential real estate. It's pressured the agricultural real estate markets in the same fashion. Now, interest rates also impact the rate of returns on alternative investments, and we'll talk about that in a moment. But with these higher interest rates, just like if you're a saver, these CDs, these savings accounts are offering more returns in terms of how much you can get back versus what they were returning back in, or it wasn't in 21. If you were a saver back then with passbook savings or a CD, I mean, you were getting 1% money. I mean, it just wasn't returning a whole lot. Well, now it's a little bit different. And of course, with the long-term appreciation, that's also a kicker, and that impacts, well, just how active these non-farm investors are participating in the land markets. If they think that that long-term appreciation is cooled off or will cool off, they'll turn their attention elsewhere. All right. It just all depends on how that long-term appreciation really fits into their asset portfolio. So when you look at it from a standpoint of earnings, I wanted to stress this particular side when it comes to the grain markets. And of course, we all realize where we're at on the grain markets currently. It's somewhat depressed. So especially when you compare it to where we were in, say, during the 21-22 crop year, right? So that orange line that you see there through the middle, from about $6.50 to $7. Okay, and I'll put the numbers here on the side. Okay, there we are. So that's where we were during about 5 years during the first half of last decade. And so I was saying at that time that, that spurred some real interest in the cropland markets during this time period. That was due to some ethanol, booms and concerns, and we had some real growth there, and that carried over into the wheat and grains complex. And so anyway, those were pretty decent years in terms of at least commodity prices. And so then I don't show this, but later on last decade in the teens, it went down below 5. It went down below 4 for some years. And man, that was tough for a number of individuals to just even, meet their cash flow requirements. I mean, liquidity is really tight when you have less than $4 wheat, okay, being sold. I don't care if you have a bumper crop or not. So then, we had post-COVID, and you see that the markets really took off in 21. They've come back down since then. And now, we're back down below $6. In fact, in some areas of the state, we're below $5 wheat, right? Now, will that trend continue? I mean, certainly we hope not, but are we in a new norm? In other words, are we in a situation where, well, the future seems to indicate that we're going to be staying in this these lower levels in terms of commodity prices for a certain period of time, that's for sure. So that is factored into a lot of bidding, purchasing decisions when it comes to land markets. And, if you're, and back in 2021, when we had prices at 10 or $11, that spurred a lot of interest in these cropland markets. We had a lot of spirited bidding, right? But when they're back down, around $5 or $6, boy, it does mute your enthusiasm for some of this cropland that's coming up. And also, I'd like to think that, when we talk about $6 or $7 wheat, in this range right here, that seems to be a lot of break evens for a number of wheat producers. And so from a cash standpoint, you got to have at least $5.50 to $6 in order to meet your cash flow considerations. Many producers are in that boat. But when it comes to full economic cost, when you're thinking about depreciation, covering depreciation, or having enough money to replace machinery and equipment when it's due, also making or at least addressing the land component also. Man, it's more than $7. In fact, it's probably 7.5 for a number of individuals. So, from that standpoint, unless we get back above $7, at least for a period of time, I think that the cropland markets, especially on the wheat side, will be pressured from these lower earnings going forward. Let's hope that doesn't seem to be the case, but at least now it certainly for the remainder of 24, it does seem to be the case. So then we move into the pasture land markets. Well, it's just a different dynamic going on, and it's driven partially due to the strong cattle economy. As long as you're keeping those calves alive, you ought to be making some pretty decent earnings. All right. Now, also keep in mind these production expenses are still elevated. Yeah, fuel and fertilizers coming down, but they're not near as low as what they were pre-COVID. And so we still have some operating margins that can be pretty tight. And quite frankly, and this is sort of my 2 cents, but if we were in an active herd rebuilding process, if the industry was actively rebuilding, and it's not, but if we were, we would have that added demand element for more pasture ground and expanding our forage base in order to accommodate our expansion of the herds that we have in mind. But I think we have a number of producers that are trying to take care of, well, they're paying debts off, either consumer or business related expenses. Their family living expenses hasn't gone down at all, so they're paying for that probably, and their insurance premiums. And also, I think that they might be in a position to better replace their machinery and equipment. All right, if they're in that situation. Also, they're trying to replenish their rainy day funds, right? Because they also realize that these good old days and times don't last. I mean, in 14 to 15, when we had the last major run in these cattle prices, it lasted a couple of years, and then you can see what happened. Well, this time around, since we really haven't started herd rebuilding yet, I think these elevated prices will continue. They look good. It will be supportive of these pasture land values, but also keep in mind that we have other expenses of which to pay. All right. So I think there's a little different dynamic going on here with the pasture land markets. I think going forward, we're going to see maybe at least a 7 or 10% increase in these land values for the remainder of 24, and maybe in future years. And of course, that all depends on, of course, drought too, and whether or not we have available hay and those forage growth conditions. But going back to the cropland, I think it's going to be a bit more muted. It's going to be in the low single digits, maybe 3 to 5% at best. All right. So I think the big hammer on the land markets, as well as, of course, commercial and residential real estate, is the interest. And interest just it increases your borrowing cost really across the board. And you see here that in Oklahoma, it's around 9%. On the real estate, it's close to 8.5%. And this is as high as it's been really in a generation. We've got a whole new generation of farmers and ranchers. If they're young, they just haven't seen anything quite like this. And so it's impacting their financing decisions. They're trying to, meet their debt obligations on time, because if they carry over on interest or borrow more, it's, that interest is going to eat your lunch, right? And of course, then on the national scope, the prime rate is 8.5. This is also as high as it's been for a long, long time. And you can see that how that impacts the commercial interest rates, especially on on the auto loans and consumer debt and that type of thing. So this, of course, makes it more difficult to finance, especially if you're in a position of having to borrow money for some of these major asset purchases. It's more difficult, makes it more expensive. And also, from a standpoint of it increases the returns on some of these alternative investments, especially these fixed income instruments such as the 10-year Treasury, where I took this as a snapshot late last week. I don't know exactly what it's at now, but a 4% guaranteed return, hey, that's guaranteed, all right? And so you've got these individuals that are thinking about, well, do I invest in some of these other alternative investments as opposed to investing in agricultural real estate? Some of the returns on real estate, yes, they look pretty good, but it's highly variable. This is a sure return, and this is a lucrative return that they really need to look at in terms of 0% risk, sure return. How does that factor into their asset portfolio? And if they're really thinking about a 10-year Treasury instead, it detracts from their bidding and being competitive in the real estate markets. Okay. So then I wanted to, last but not least, look at, well, how does these interest levels impact your land payments? And it certainly does. I threw in a couple land prices in there, how much we're borrowing, about 30% down. We're financing 70%, 30-year note. And of course, in 2021, we had 5.2% money. That's what the KC Fed showed for Oklahoma for ag real estate. Well, those are the good old days. And so then we blew right through 6%, 7%, all the way up to about 8.5% now, according to their latest credit survey. And you see what that did to the land payments. It's made it much more expensive for the same purchase, essentially. Okay. So if you're, on a tightrope in terms of, I can only afford to pay about $100 an acre, and so think about a quarter section. Well, that's $16,000 in terms of a payment annually, and that payment's going to come from somewhere. Hopefully, land will provide some of it, but then does the off farm job pay for some of that? This is after everything's paid for, right? Not only your production expenses on the farm, but your family living, and can we afford something like that at these current repayment terms? Well, how much can you afford to pay? Well, it's about $1,550. And I don't even show that as a land price on here. Now, you can find some of those tracts out west. That's fine and good if you're that producer out west, looking for some pasture ground. But if you're an individual that's looking for cropland, you're not going to find many tracts like that in dry land. And certainly as you move further east, you're not going to find many tracts of $1,500 at all. You could find them, but they're going to be pretty rough. They're going to be from a mismanaged situation where you're going to need to spend some money to make them productive again. And so it just makes it more difficult for these individuals to be able to finance some of these purchases. And they're going to have to, uh, temper their bidding or just stay out of the bidding because they can't afford it. So it impacts a number, of individuals out there. And so, those individuals are wondering, well, what can I do? Well, yeah, they can hopefully come up with some additional cash to lower the amount that's being borrowed, but that's easier said than done. Or do they qualify for some FSA financing, with some better terms? And that's always possible, but um, that's something that needs to be checked out. So anyway, that's where we're at, given today's interest rates. It looks like they peaked, and hopefully we can sort of turn the corner a little bit and start decreasing these interest rates and that heavy burden that we're paying. But I can almost guarantee you that they're not going to drop as fast as what they increased to get us here at this point. Okay, it's going to be a slow grind out or situation where it's going to take a while for us to get back down to some of those 6 or 7% percent levels that are a bit more manageable. So in summary, this is where we're at in terms of land values in 2023. Well, yes, we saw a continued appreciation on those values, but I think the growth has been tempered, especially in cropland. We've had some headwinds, especially with those higher interest rates, lower commodity prices. Our production expenses still remain elevated. And so that's tempering a lot of liquidity out there and working capital. How about for the rest of 2024? Well, I think it's really a mixed bag. I think, in my opinion, and we're going to see some growth in the cropland markets, but it's going to be really tempered, especially at these commodity prices where we're at right now. And then single digit growth, I think, for pasture ground is going to be a bit more spirited. But once again, interest rates certainly aren't helping the cause there. And so probably 7, maybe 10% at the best, but probably 7 or 8% growth, a digit growth for pasture ground would be my best bet. So longer term, beyond 24. So what about 2025? Well, any or all of those factors really come into play, but there's other motivations that come into that bidding process, and that's that human element, and that's really hard to anticipate because you just throw out the economics, you throw the math out the window, and when you have greed, ego, and fear that comes into play into that purchasing decision, it impacts the stock markets, it impacts the commodity markets. The land markets are not immune from this. You have two-spirited bidders that are willing to bid up on a tract that they also realize that probably won't come up again for sale during their lifetime. And by gosh, they're not going to let the other party have it. And so they're bidding, moon money. And so after it sells, you're thinking they paid how much for that? What are they thinking? It will never pencil out for that. I'm sure we've heard stories, in the past about those situations. And, it's a deal where, well, hopefully it does fit into their business plan and their farm organization. But they're going to have to pay for it one way or another, right? And we all have our reasons for that. So I would encourage you to check out our land value website. We've updated that. The web link is shown down below. And so we've got the 2023 numbers in there, a great clearinghouse of information. And I'd like to think that it has some good information for you of which you can base your decision on some good information and stay grounded and do the right thing at the right time. Also, please check out the Kansas City Fed and also the USDA for some comparisons and to complement your information and doing your homework. on these land markets here in Oklahoma. Good sources of information also. So with that, I really appreciate your time and attention and being here today. I know that, we're all busy individuals. You obviously felt like this was the value of your time and attention. Hopefully we've met those expectations. And hopefully I gave you, the viewer, a better understanding of the land markets here in Oklahoma, the drivers behind it, where we've been, where we're at, where we might be down the road. And so that you, in turn, can provide that information to the clients that we serve and the publics that we serve here in Oklahoma. Okay. So short of any questions, I'll turn it over to Brent. Also, I want to remind you that there's that survey link that I'm showing there below the combine. And please fill that out. Let us know how we're doing. Hopefully we can make a good product even better so that down the road, you will also feel like, hey, I need to tune into that webinar and get some good information. So Brent, back over to you.
All right. Thank you, Roger. I have it set where you can unmute yourself to ask questions, or you may ask questions through the chat window. The link to the land values site that Roger shared, I've also shared that link in the chat window for you to click directly on it. And I also shared in that chat window a link to the webinar survey. So while people are typing out their questions or thinking of questions, I do want to remind everyone that we have our next webinar scheduled at noon on September 17th, and it will be about marketing opportunities through the Oklahoma Quality Beef Network.
Sounds like good stuff, Brent.
It is. Well, I don't see any questions, so I'm going to go ahead and end the webinar now. So thank you everyone for joining us, and we will see you on September 17th.
Keep in touch.